Today is Sunday, September the 8th, 2024. I'm doing this short video clip basically to give my viewers a sense of what I feel may be happening in the days and weeks ahead after what happened in the past week. Now, just to backtrack, in the first week of August, remember we had a mini sell-off in global equity markets. In the first week of August, we saw the S&P 500 lost 4.25%. In that week, the Nasdaq Composite lost 6.36%. But the worst happened in Japan, where the Nikkei 225 fell more than 12% in that 1 week. Now, this past week, also the start of a new month for September, we saw S&P 500 closest to week down 4.25%, same magnitude, and the Nasdaq Composite also fell 6.12%, not as bad as in the first week of August, but almost the same. And this gives rise to the idea that the market may be looking at further downside. Now, the catalyst for this past week's sell-off in US equity markets has been the weaker than expected non-farm payroll numbers, which give rise to the fear of a recession in the States. Now, we want to be watching this carefully because September has never been friendly to global equity markets. Would it be history replaying itself? Watch out for what I'm going to share with you in the following.
I'm going to reference the Micro-emini Nashtag 100 to give you an example of what I feel will be happening in equity markets around the world, specifically the US equity markets. Now, they all have very similar structure, whether you're trading the Dow or the S&P 500 or the Nasdaq 100. Now, the Dow is a little bit different, but I think the S&P 500 and the Nasdaq 100 do have very similar price action. Here in the weekly time frame, you can see that the pandemic low was 6,628.3 and the high is 20,983.5. Now this unfold in a three-wave pattern which hit equality at 20,623.25. We had an equality move in a three-wave fashion, suggesting that this is a more of a end of a move. This could be a temporary top of 20,983.5. What follows here is could be we are moving into a corrective pattern. And we saw that in the first week of August, where the market came off quite sharply to a low of 17,346 even. Now, this is basis the September contract here. Just to give you an idea, the larger time frame has finished a three-wave equality rally, followed by a top up, and we probably will be seeing some more pullback in the near term. Okay. Now, I'm going to show you the daily time frame. Now, the daily time frame we will see very clearly that this move downwards from the all-time high at 20,983.5 is pretty sharp, and we have that rebound for 3 weeks after the August 5th low of 17,346 even to a high of 20,425.75. So this week is again we see similar pullback, and this gives rise to the idea that this is part of a three-wave pullback here, targeting anywhere between 15,530 to 16,388. So do watch out for this bracket of prices here shaded in red. Okay. So in the meantime, we can see that the closing on Friday was pretty sharp at 18,458.25, although the low was 18,337.25. So this gives rise to further downside risk going into at least next week. Now the catalyst next week will be the data that we want to be pay attention to will be Wednesday CPI numbers. The headline CPI year over year is expecting to dip from 2.9 to 2.6. So we can see that that is the expectation. If that is the case, we probably will see some volatility on that particular day, which is Wednesday. So now going down to the lower time frame on the 4 hours, you can see that the one area that we will have to pay attention to is basically this level over here, because there is no low risk trade setup available. But here we can see there's a pivot here at 19,139 even. So if price somehow go back into this level, do watch out for a reversal pattern. Ideally, we do get a reversal pattern around 19,139 even for the continuation of this leg lower. Here, near term, I think there is a possibility of market hitting 16,389 to 15,530. So do watch out this bracket of prices. So this is all I want to share with you. So what I do see here is that September is likely to see further losses, but it's going to see a heightened volatility going all the way to October, just ahead of the November 5th US presidential election. So it's going to be a very volatile 2 months going into the election. So just to watch out, I think it favors downside more than upside. Just be careful when you're trading equity markets because it's going to be volatile. All right, guys, I will see you in the next video.